How to read a stock chart, a beginner's guide. You've probably seen some of the crooked lines when watching business news or heard of candlesticks from your favorite day trader. These things can be intimidating, especially if you've just started investing. So I made this video to help you read the stock chart easily. Today, we'll break down the basics of reading a stock chart, including how to interpret the various elements and indicators, and how to use this information to identify trends and patterns in the market. Watch carefully until the end, because by the end of this video, you'll have the basic understanding of what you need to know to read the stock chart and become a savvy investor. Before we begin, hit the like button and subscribe. So what exactly is a stock chart? Now, ideally, a stock chart is a graphical representation of the historical price movements of a particular stock over a period of time. The way I like to think about the stock chart is it's like a treasure map that reveals the ups and downs of a stock's journey. Let's say that. A stock chart provides the opening and closing prices of the stock, the high and the low prices for the day, and the trading volume. In short, you can see how the stock has performed in the past and use that information to make informed decisions about its future. So you can identify the patterns that indicate whether the stock is likely to rise or fall in value by looking at its trend in the chart. One thing you have to remember, though, is that the stock chart is not just a visual representation of past data, but also a reflection of the underlying market sentiment. It encapsulates the collective thoughts and emotions of investors at a given point in time. By analyzing the chart, you can gain insights into how investors perceive the stock and its potential for growth or decline. Now, let's say you're interested in investing in Apple Inc. If you take a closer look, you might notice that the stock tends to rise in the weeks leading up to the release of a new product, such as a new iPhone or iPad. For instance, this is how the stock pattern for Apple looked at the time the announcement of the iPhone 14 series. You can see how the stock jumped before the release. So with this information, you can decide to purchase the Apple stock before the release of the new product in anticipation of the price increase, making money. Similarly, a stock chart can also help investors identify potential buying or selling opportunities based on technical indicators. For instance, if the stock price breaks through a significant resistance level, it could signal a bullish trend and be a good time to buy. On the other hand, if the stock price falls below a significant support level, it could signal a bearish trend and be a good time to sell. Which begs the question, what are support and resistances on the stock chart? Now, support is like a safety net that catches the stock price as it falls. It's a level at which buyers step in and prevent the stock from dropping even further. Resistance, on the other hand, it's like a barrier that holds the stock price back from rising higher. It's a normal level at which sellers step in and prevent the stock from going up. Support and resistance levels are often visible on the stock chart as a horizon line that marks areas where the stock has previously reversed in course. These levels can be formed by a variety of factors, such as historical price patterns, key technical indicators, or even psychological barriers. For example, let's say you're looking for a chart of Apple's stock price over the past year. You'll notice that the stock has been trading within the range of $120 to $150 for several months, with a clear support at 120 and a resistance at 150. Every time the stock hits 120, buyers step in and push it back up, while every time it hits 150, sellers step in and push it back down. You might interpret this as a sign that the market views Apple as a stable, reliable investment, with a floor of $120 and a ceiling of $150. You could use this information to make informed decisions about when to buy and sell the stock. Take, for example, if you see the stock approaching the support at 120, you might buy shares expecting it to rebound. Conversely, if you see the stock approaching the resistance at 150, you might sell shares expecting it to fall back down. Of course, there's no guarantee that the stock will actually behave in this exact way as it has in the past. Market conditions change, unexpected news can emerge, and the stock price can break through support or resistance levels, easily in some instances. That's why it's important to approach support and resistance as just one tool among many in your investment strategy. When analyzing the stock chart, we're actually looking at two charts, the line chart and the volume chart. I hope at this point that you're still following along with me. If you are, smash the like button. Now, let's talk about the line chart. Imagine you're a seasoned sailor, and the line chart is your navigational map. The chart provides you with a clear and concise overview of the investment's journey, much how like a map provides you with an overview of your journey at sea. Just like how sailors need to be aware of changes in the weather, investors need to be aware of changes in the market that could affect their investments. The line chart acts as a compass, showing investors the direction the stock is heading and any potential obstacles it may face. For example, let's look at the line chart for Zoom Video Communications, ZM, during the COVID-19 pandemic. As the pandemic forced many people to work from home, Zoom became an essential tool for remote communication, and its stock price skyrocketed. The line chart for ZM during this period would show a steep upward trend, indicating that the company's stock price was on the rise, just as you can see it was on the screen. However, as the world slowly returns to normal, the demand for Zoom services is expected to decrease, and its stock price may fall. Notice how the line chart descended. Now, just like how sailors use their maps to navigate unfamiliar waters, investors can use line charts to navigate unfamiliar markets. Investors can identify patterns and make informed decisions about which companies to invest in by analyzing the line charts for different companies. From what we've seen, a line chart is a useful tool for investors to navigate the ever-changing landscape of the stock market. It acts as a compass, providing investors with an overview of the stock's journey and helping them anticipate potential changes, and yourself as well. Here's the catch though. The line chart can be represented as bars or candlesticks instead of a line, so don't get too confused. The bar chart is a classic way to represent price movement. Its use of vertical bars to represent price is easy to interpret. The left tick is the opening price and the right tick is the closing price, while the top and the bottom of the bar represent the highest and lowest prices traded during a single trade period. The chart's simplicity allows investors to quickly identify trends and changes in the market sentiment. The candlestick chart, on the other hand, is more of a nuanced way to represent price movement. It features the same component as a bar chart, but the use of color and shape helps investors identify market sentiment and patterns. An empty or white candlestick indicates that the security closed higher than it opened, suggesting a bullish sentiment, while a filled or black candlestick indicates that the security closed at a lower price than it opened, suggesting a bearish sentiment. The lines above and below the body of the candlestick, known as the wicks, provide additional information about the trading range and volatility of the security. Both bar and candlestick charts are widely used, but some investors prefer candlestick charts because they think it's easier to identify market sentiment and patterns. These patterns can be used to predict how the market will move in the future, and investors use a variety of techniques, including technical analysis, to analyze trends, price patterns, and volume movements. Some investors, though, might prefer bar charts over a line chart because it provides additional details about price movement during a single trading period. With a bar chart, you can easily identify the opening and closing prices, the highest and the lowest prices traded, and how the stock itself performed during the day. In the end, however, the type of chart an investor uses is often a matter of just preference. Let's take a closer look at how candlestick charts can be used to analyze market sentiment and patterns. In early 2021, GameStop, a video game retailer, saw a sudden surge in its stock price, driven by a group of amateur investors on social media. As the price continued to rise, many investors and analysts turned to candlestick charts to try and understand the market sentiment and predict the stock's future movements. One particular candle shape that emerged during that time was the doji candlestick. A doji occurs when the opening and closing prices are very close together, creating a small body with long wicks above and below. This candle shape can indicate indecision in the market and a potential reversal in the stock's trends. As the GameStop saga unfolded, doji candlesticks began to appear more frequently on the charts, suggesting that the market was unsure about the stock's future direction. Some investors interpreted this as a sign that the stock was due for a correction, while others saw it as a buying opportunity. Now, the stock did experience a significant price drop, but not before reaching unprecedented heights and shaking up the investment world. The use of candlestick charts and other technical analysis techniques played a role in this story, and all as investors tried to make sense of the market's behavior and predict what would happen next. Moving on, We'll now talk about the volume chart. I'd like to think of the volume chart as a symphony orchestra, with each transition acting as a note in a piece of music. The volume chart shows the intensity of the buying and selling activity, much like a musical score shows the intensity of the different instruments playing together. Now, a high volume of buying activity may indicate that investors are optimistic about a company's future prospects, while a high volume of selling activity may suggest that investors are bearish about the company's prospects. By analyzing the volume chart in conjunction with the line chart, investors can gain a deeper understanding of the market's dynamics and make more informed investment decisions. For example, let's consider the stock chart of Tesla, TSLA, during the first half of 2020. Tesla's stock price was on the rise during this period, and the line chart showed a steep upward trend. However, if we look at the volume chart, we see a different story. There were several instances where the volume was high, indicating that there was a lot of buying and selling activity during those periods, but there were also periods of low volume, where the stock price remained relatively stable. The volume can also provide clues as to when to enter or exit a position. If the stock price is rising and the volume is high, it may be a sign that the stock is in a strong uptrend and that it's a good time to buy. Conversely, if the stock price is falling and the volume is high, it may be a sign that the investors are selling and it's time to exit the position. From what we've observed, the volume chart is an essential component of stock market analysis as it gives us insight into the stock market sentiment and trends. It tells us the level of buying and selling activity for a particular stock over a given period of time. So, where can you find some of the best stock market trading tools? Some known brokers like E-Trade, Robinhood, and TD Ameritrade give you the best stock trading tools, including comprehensive charts that you can follow and analyze the stock market. Be sure to check out Yahoo Finance as they provide this information as well. Now, whether you're looking to invest into a specific company or gain an understanding of the overall set of market trends, the ability to analyze stock charts will help you to navigate through the stock in the stock market easily. Hope this video gave you the basics of what you can expect in the stock charts. If you found this video helpful, smash that like button and subscribe. I'll see you in the next one.